The difference between success and failure in the stock market has nothing to do with your skill set. It has everything to do with your mindset. I'm Evan Lazarus, Chief Knowledge Officer and Mentor for T3 Live. I'd like to invite you to an exclusive trading education event in Charlotte, North Carolina on Saturday, March 16th. Attendees will learn what we believe to be the 5 biggest mistakes that plague the average trader and how to overcome them, with a specific focus on trading psychology and risk management. Reserve your seat at t3live.com or call the number below. I look forward to seeing you there.
Good afternoon, everybody, and welcome back to another StockTwits Q&A session. We're answering your questions live. I'm Brittany Umar here with Scott Redler. Scott, want to jump right into it?
I want to just say happy Thursday. It's been a long week. We've had a full week of Brittany, which I think a lot of people are happy about. So we're happy to have her in the mornings, and it's nice to be here on a consistent Thursday. And we're going to try and make these Thursdays a bit more consistent because there's a lot of action in the market. A lot of people have a lot of questions. So the two of us will be here, and we will try and address them for you.
Yes, and we're starting pretty general. LP here just wants to know your analysis of today's market move.
Today's market move or like the last week market move, the last month?
He's asking for today, but feel free to put it into context if you want to backtrack it the rest of the week a little bit.
All right, well, so let's talk right now where we're at, okay? Because it's been a very volatile week. It started last Wednesday. So if you've been a little thrown off and you've got your head whipped around a little bit, you're probably not alone. Because if you recall last Wednesday, let's just go right to the chart, I'll walk you through it. Right here was that first day when we pretty much took out the 8-day moving average, which then put this ascending channel in jeopardy. So from there you had, at that point I think a lot of traders tried to be a little short. You had a little follow through. I know there I pretty much said, okay, I'm going to cover, but not necessarily looking to go long, or add positions back. And then from there you had a little snapback, a little higher than people would have wanted, and then boom, that was a real harsh down move. So from there, made a little sense, right? What was the high here? The high was 1530. Here's your low of that day was 1487. So, what I do, Brittany, is I look for a red dog reversal. So, on that day, I'm like, let me try and find the cute buy. Could have been across a lot of different ETFs. I know in the morning call we talked about the red dog reversal strategy with ETFs and stocks. So on this day, said, okay, I'm gonna put that strategy to work. You go back to the chart and you'll see this is the strategy. Here is the low of 1487. Here's the low of the day thereafter, 1485. You could have bought this, okay, and then had a nice active trade, and then you could have taken it home because sometimes tactically, even if you're tactical in that portfolio approach, you look for a day and a half, and not only did you get a day and a half, you had a day and an explosive half. So if you kept it and said, I'm gonna just trail it, have this as the low, now you have a short-term red dog reversal from the other way, where it pushed through the highs. So today's high was 1525, okay? Yesterday's high was 1520, and then it closed below. So, right now, if you're still being tactical, there's still money to be made tactical. If you're not loaded in longs and riding this out and felt comfortable buying into this dip because you thought maybe it could be a little bit further, you thought maybe, we would come into this trend line, which was lower, because a lot of people did think that this wouldn't be it. It is what it is. So at this point, here's the halfway point. This is like 1506. If it wants to make a better attempt to break out above this resistance / channel, I would say, hold 1506. If it can hold 1506, then it could be more of this range type trading where you see, back and forth action, and then you could have just expanded knowing where, bigger support is, which is right here. So right now you're in the top of the range, failed again. Let's see if it could hold higher and show commitment to it, and then we'll see the action thereafter.
So Stone Street Trader asks, do you think we can comfortably buy or add here after the snapback?
Well, we'll see what happens tomorrow. Each day I'm treating differently. I don't have just short on the brain, and I don't have, I'm not looking to go buy, the same amount of positions we had during the last trend, but I don't think you fight it. So with today, what's interesting is, that little sneaky pull-in that happened in the afternoon happened a little bit earlier. I was, talking to Lou on the desk. I'll even say it. Yesterday, if you remember, around 3:40, there was like a sneaky pull-in just to close off the highs. No big deal, just to shake the tree a little bit. And then today, the pull-in or that faulty action started earlier, and we were saying, oh, well, they started a little earlier. Maybe they pulled the rug out. So that's, so some guys added extra spiders short. So if you want to look at the chart, on a more micro basis, look right here. Look at the 5-minute chart of what took place here. If this was a daily chart, it would have been bearish and you would have been loading in, because look what you had here. You had an ascending channel. This is, by the way, your 5-minute chart in the SPX. You could do it in the spiders. Okay, here was an engulfing bar at the highs. You know what, I'm going to go to the spiders instead, because a lot of people trade that intraday also. So, you know, here is your ascending channel, okay, where it broke out into the afternoon. And then what'd you have here? You had a micro outside day where it tried to make a new high, and then pow, it engulfed this entire, you know, hour-and-a-half time period. So that could have been, okay, you know what, we're near the highs, we're near this, let's, you know, add on some hedges, let's add on some shorts. And then from there, you know, it came down to support, and then its support really didn't bounce, you know, or it didn't retrace much at all. Or even right here, once you had that one bar, you know, it put a little bit of a bear flag before continuing. And then as it got closer and closer, it just rolled into the close. But right here, this outside day in the 5-minute chart gave you a little heads up that, you know what, we might not be closing on our highs, and you might want to take off some longs into that 1525, 1530, or you might even want to, you know, add to some shorts or some hedges. And, you know, if you did so, you made some cash flow. Hopefully you covered a little bit into the close. And now you go back to the daily chart, and you want to see if, again, like I said before, you know, some guys might be going out short because of, you know, this type of tail into resistance, and then you want to see, you know, how much that could pay you or where it can go. Let's see if it holds halfway or goes back to the bottom of the range.
And tomorrow is, of course, March 1st, and we have Remark here who is asking, do they always put new money to work on the first day of the month?
Do they always? If they always did something, then everyone would be rich. So they can't always do something. So at times, you know, people do get new money to allocate to work. So you do see some inflows. For some reason, sometimes it happens on a Monday. And then, so a lot of people say, oh, today they were trying to mark up the market for end of the month. All right, so people's performance could look better. I think that happens, but you can't put too much focus on that, because, you know, like if you said it was going to happen into the close, you know, would they mark themselves up into 2 o'clock? No, they have to wait to the close. And then, so tomorrow, maybe there's some new funds that come in. I think you watch the action a little bit more. Typically, I think there's more focus on that when it's at the end of a quarter, because people get quarterly funds, and after a half year or even after a new year. But monthly, it's not as powerful. And then you also have the sequester tomorrow, you know, which is also going to be something to throw in the mix, which I do think is going to take place. And we have to see how, once those headlines hit, you know, we'll see how the market reacts to it. Right now, they're trying to just ignore it. You
know, we have a lot of short questions today, a lot of questions pertaining to shorts. And before we dive into some of them, what do you make of that? What do you think that says about the sentiment right now?
Well, that's good. That means that everyone's not overly bullish. That, you know, that makes it that we can continue higher. If everyone was saying, oh, what could I buy? We're going S&P 1700 sooner than you thought, Red Dog, then I would think sentiment is too much to the bullish side. So for those who are contrarian, who like to play the contrarian view, here we are getting close to near highs, and all everyone has is short in the brain. Same way when, you know, I was trying to do that Red Dog reversal earlier this week, and I'm getting hit from sales traders saying, you know, I hate the market here. I'm sending out a note. People are saying this isn't confirming a bounce. That's not confirming a bounce. Meanwhile, there we go bouncing, and everyone's trying to be extra smart. You know, if you look overall at the trends, you know, let's just look at some of these trends here, and all everyone wants to do is short, and all we have is a really nice trend. This is your macro trend that's been intact. You know, we've had a few intermediate trends that I've talked about in some of my presentations, that if you're a professional trader and you're actively fast, you could maneuver them for alpha. Remember this head and shoulders pattern? This actually was really interesting because this was last year. Last year we wedged, and then we followed the 8 and 21 day. Look, it got a little choppy here too before making new highs in March. Then it came down, made a lower high, then finally it did break in April. From there, you had a 6-7% correction or something like that. So you could have played the short side there when it broke. Then you had another trend all the way to the highs, and then it actually became an accelerated one, and then it broke right here, 1440. So that was your spot that you could have got out of the way and made yourself a nice amount of money from the short side, or at least got a little bit more tactical, raised some cash. And then from here, you know, we've been just riding this trend. This one's been a bit more accelerated. Okay, so now we just broke that. So now let's see if we go sideways in this area, and then this is more macro support. But overall, you know, it's much better buying the dip on a macro sense versus trying to, you know, short and make money on that direction. But again, at this point, when we're that close to the highs, everyone's always looking to get the free money, which I think a short is fast. Because look what happened here. Look at that day. Like, that day was, you know, harsh, fierce, and fast right here. Boom. So people and traders, you know, the traders are, they like immediate gratification. So do I. Do you like immediate gratification?
Who doesn't?
Right, you like a compliment if you look pretty, or if you go somewhere out to dinner and the food's good, the waiter likes. Everyone likes compliments, and the best way for a trader to get complimented is a fast move. That's why traders like momentum, because momentum moves happen fast. You can put it on, make money, take the risk off. But anyway, so that's why a lot of people love to be short, because when it happens, it happens quick and engulfs a lot of days. But if you're fighting those days until that one day happens, you didn't do so well. So anyway, just take short off the brain. And there are some tactical shorts today. I just showed you on the 5-minute chart how you could have seen some faulty action in the spiders to make some money there, and you could have overlaid that into so many different stocks. But for now, the trend on a lot of different levels is still to the upside. Maybe you don't have to be all in, as the market's still proving itself here, but there's much more money to be made that way.
Well, before we take short off the brain, I want to see if you're able to maybe give some ideas to, we have questions from Mike, LP. They're all asking, in this choppy market, what sectors or ETFs you find to be the best short plays right now?
Well, in this correction, I just was looking to see what sectors have been acting best, what are near highs, and what came in the most and is just back at resistance. So if you want to short a bounce and you don't believe in this rally, there are some sectors that were weaker and that have bounced back into resistance. So if you want to see, first I'll show you the few strong ones, because you go, just take one more look at the spiders. Look where we are. We're right around the highs here, reversed pretty hard. So you want to see what sectors are either above the highs or near it, so they're in line. I think the XLI is in line. Okay, you see that move right back to the high. So this, is kind of just like the spiders, where you don't have to be in a rush to short it. It's in line with the spiders. You look at just say another. What was that other sector that I was looking at that was pretty in line? The consumer staples. I'm not the RTHs. I'm sorry, retail. Different pattern actually. I think this is even stronger than the spiders, where it's still closed green near the high end of the range after retesting the 50-day moving average. But then you look at the home builders, XHB. It only came back to retest this broken trend line. So if you think that we're going to roll over now, look how far away the highs are. Here's a small little red dog reversal this way, where we traded through, closed here. This was a spot that you probably could have said, I'm going to try a tactical short, because look how far off the highs versus where you just saw the industrials and you just saw the spiders. Another group like that too is the ags. Ags, closed green today, but it's so far off this last breakdown here. So this group is showing relative weakness. If you wanted to be short, the metals have been the worst group. They had a feeble bounce off macro support, and now look at the GLD. We talked about it the other day. Come back into this. This was either the two-way it can go, and obviously it didn't go this way. You had a nice 3-day move, and I think in the morning call we said, in order to see if if this area could hold 154.50, to see if it, some commitment to the 3-day bounce, perhaps it can continue. But what happened is you had pretty much a bull surprise, where you closed in the highs, open lower, then had another move lower, and right now it's still a lot weaker than stronger. So the metals have been a lot weaker, but then you have to think about it in the other way. If the market comes in and you want to be short the market, typically when the market's been going down, the metals have been rallying. It's been a contra play. So I guess that's not the best example of what you can short there. But recently, shorting bounces in the metals have worked. 148 to 150 is macro support, and if that happens to give way, then that's an area that's been showing relative weakness, and that might be a juicy one.
There you go. There's a short idea for you. We have your friend Ben C. Banks here, who has a question about volume. He says, I'd like your thoughts on volume. For example, some traders need it for every move and don't buy unless there is volume confirmation.
How many times in the morning call do we talk about volume, and everyone's saying, where's the volume? A lot. So with that said, if you wait for volume, you've probably been waiting for years. Anyone that watches the media, anyone that watches Bloomberg or CNBC or any of those, everyone's like, but it was a low volume rally. Okay, you know what, I'm not making fun of your question, Ben, because you're very good on Twitter, and I like your work. But the reason why I'm a cocktail napkin technician, not is because I just like drinking wine sometimes with my wife, or we like going out for Thursday happy hours. It's because you don't need one indicator to confirm another indicator to confirm another indicator, because if you have 20 indicators, 10 of them are going to unconfirm the other ones, and you're going to sit there, you're like this. What do I do? Anyway, but volume is important at certain times. You always want to see a volume on a nice breakout, because then there's some people behind it that if we happen to open lower, they'll come support their breakout. You always want to see volume at like a capitulation low. You want to see volume on a red dog type reversal. Volume is good but you don't want to stay out of the market because there's no volume. I know a lot of people yesterday were like, oh, there was no volume in yesterday's rally, but meanwhile, they got shorted they shorted the market all the way up, and then they couldn't handle it, and they probably covered in the morning or in the afternoon squeeze above yesterday's highs, before we had that little rug pull in the afternoon. So with that said, like something interesting here, like I hate, Facebook has been horrendous, okay? And it finally had another little red dog reversal, but I did look at it today and say, you know what? I want to see what the volume was like today to see if there was anything different, okay? And here was a day of decent volume, okay? Decent volume and a reverse, so I got back long it. Hopefully, I guess if it were to clear this little downtrend, it would have a move to the upside there. So here was a day when volume came in, and maybe it's important. I remember LVS 2 quarters ago or so when I talked about the capitulation move in LVS after a big move from the highs. Here is where you had your outside day. Here on earnings, okay, it opened lower. It was priced in, and look at the volume. This was capitulation volume. This, you could have said, I'm buying that low in LVS versus, and if it doesn't break it, I'm going to stay with it. So you had a nice volume capitulation. That's a textbook. Buy it and try and stay with it. And LVS has worked, since that point, going across. Okay, and then let's see when it broke out here. Okay, this is also a spot where you want some volume. Remember this channel in LVS going sideways? So to gap up and start the year, look at the volume right there. Light volume while it's in this basing process. So on this day, you saw nice volume. So that was your day to get involved, and it wound up going higher. And lastly, just because we've been talking about the 3D sector, and a lot of those stocks have been hammered. And a few days back, finally, Triple D split 3 for 2, and it opened down and came off the lows, and I think we put it off the chart saying that could have been a capitulation low. Look at the volume, look at the extreme nature of the move. Go to Triple D, and there it is. Look at the volume right there, and look at this wide range big bar. So with that said, it was worth taking some long. And now I think, I tweeted about it today and said if you were taking it for an intermediate bounce, this is probably a good area to sell it. But overall, look at the volume here. So it could, it was a buy versus that low, and from there, you made yourself a nice percentage gain. But here is when the volume was important at a key level, and I threw a few other things in regards to volume in there because it is important at times. And if there's lack of volume in a strategy that you have, just trade the strategy, but do a little less.
All right, now what about banks? Stone Street Trader wants to know, what's your favorite bank stock for 2013, 2014, and why?
Well, that's a tough question because it rotates and it changes. Some bank stocks I like to trade for a move because the ranges are bigger. Some have tighter patterns, and some I feel more comfortable saying, okay, you could buy it now, and in 2 years from now, you're probably pretty safe that it'll be a lot higher. So with that said, in August, I went with Bank of America because it had the best pattern, and I thought that it could, continue and, stair step higher. And in our 2013 thesis, we talked about 14 to 16. I still think it can get there, but short term, look at Bank of America. Short term, it's not bouncing back the same way, and I'm long a little Bank of America, but if you look at, this was the core trade in Bank of America, okay, broke out really well. Here is your bull flag continuation, and then this is when it broke a cute level where you could have taken some risk off. It also broke this ascending channel here, so this was a spot. So with that said, you could have taken some risk off, but if you didn't get back in it and you were in the long term, you were probably feeling a little bad about it here. But then you also had another small short-term trend that it broke. So lo and behold, here's this upside channel, okay? And now Bank of America, as far as if you went with Bank of America for a big bounce, in the past 3 days, look where it is versus the high. So this is showing a little relative weakness right now, okay? You go to JP Morgan, that wasn't so explosive, when Bank of America broke out, but it looks like, look at this bounce back. This bounce back from this reversal went all the way back to the highs a lot quicker. So that happened to be a better trade for now. Okay, and if you talk about last year's percentage moves, it didn't have a huge move because look what happened with that, the London Well scenario. But if you timed it well, you could have made money. But anyway, it's all timing. And right now, JP Morgan, I think people are looking at JP Morgan to see, what type of commitment it has to this wide range bar yesterday versus the highs. So I would say watch JP Morgan. You have your moving averages coming into play. If you could hold the upper end of this channel, I think it'll be healthy. So JP Morgan, is a little less erratic, doesn't trade as well, but I think longer term you'll hold it. And lastly, Goldman Sachs. This one is where traders tend to flock because the moves are somewhat bigger, not percentage-wise, but trading-wise. This was the 121 breakout in Goldman, okay, and then you had your gap up to start, which it wound up holding the 8-day moving average the entire time, and it was a nice hold for investors. And then it turned into a really nice trading vehicle recently because it broke this upper channel. So let's take a look here. Let me let it be visible for you right there. And this is when it broke the 8-day. So if you were riding this channel, you got out of the way, or you could have got short this day when this is the first time you saw a king and queens formation, which I call it, which is a green and red day engulfing in a row, and that's the first time you saw it during this entire trend. So that was your signal to exit and for aggressive traders to get short. Quick money. And then I remember getting short on this day into the bounce back to test the trend, and it went lower, and now it's snapped back, but it didn't snap back to the highs. At this point, it's still somewhat best in breed, but there's these little ascending channels here where if Goldman were to break below today's low tomorrow, this could be a sign that maybe the banks have more pressure to come, and if not, we'll see what it transpires to. But so banks mean different things at different times. I think if you're someone that's not a trader and you're looking to put some money away for the next 2 years, what's the safest bank from this $11 level? I would say, Bank of America. If you're not going to trade and you're just going to throw it in the drawer, I think unless America falls apart and it's game over for stocks, it could be considerably higher over the next 2 years.
All right, Bank of America. All right, keep the questions coming, guys. We're going to take a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back answering your questions live. Let's talk retail. We have one from Stock One Trader asking about a name we talk a lot about, Coors. He asks, what's a good entry point right now to get into Coors?
Well, this stock, few different ways, okay? Great new issue, one of the 3 amigos we talked about, and it was acting very well, after earnings. And then they announced a secondary, and that kind of put a big dilution or big overhead on the stock. So a lot of people were looking for that type of entry. So a few days ago, we saw a red dog reversal. We saw that type of entry, and now I think it's a little tough. If you look at the chart here, of course, you'll see that here we talked about it the other day, where this was your gap, and we like to trade against gaps as long as they hold. And this is when they announced a secondary, and it broke, and it caused weakness. So guys who were looking for an entry, here is your red dog reversal entry where it traded below 57.85. Hit that day, 57, wound up coming above it, okay? And then now it's it's in no man's land. So I would say you have to be pretty careful with Coors here. If you're a macro investor, it really doesn't matter. You want to talk about Coors from a macro stance, you will see that. Let's go to the weekly chart, you can see it better. It's been an unbelievable ride for you guys, okay? Look where it came out as far as the IPO right here. This is when it cleared one level. This is when it cleared another level. Then it based again, went through a time frame when, it had to absorb a huge move from the IPO. And then here's where it broke up again. So right away, right around here, it's just another day in the life of Coors if you're a long-term investor and you're going to stay with it for a while. As far as, short term, if you're not in it, okay, that was your spot right there. And I would say at this point, if it comes in tomorrow and you want to trade versus here, you could trade versus here, but I think it's going to have to be in one of these time frames when it does a lot of this, because it has to absorb and it has to continue to repair the damage that just took place right there.
All right, here's one from Dwayne asking, what are your thoughts on Zynga at this level?
Zynga. Zynga is a stock that even traders love because when it moves 8% in a day, but then dies. And we talked about Zynga after earnings. In my head, I think the price was $275, $285, and we figured maybe you can get close to $4. I haven't really been in it for a while, but if you take a look at it with the whole gambling scenario that everyone's been talking about, it does look as if that there's something decent about it. This is when a lot of us were looking at it and had a lot of fake out moves. This move, boom, fake out. This move, boom, fake out. And then finally we had a decent move in Zynga where on earnings it broke above 280, wound up going almost to 380. That's a nice percentage move. And if you look on the longer term chart, it got into the gap a little bit and it filled a portion of it. So as far as now, with this type of stock, if I were in it, and you want to see it maybe continue, I would say the longer it holds above 326, so to speak, the higher the probability at some time it might be able to take out this resistance of about 370, and then you could see more of a gap fill to the upside. The stock has been battered and bruised. This was something that everyone thought would work out phenomenally, going into Facebook IPO, and wound up being a full-fledged disaster. Tried to give you a little bit of a chart lesson here because I was involved with this during this whole trading time frame. Here's when the IPO came out and it didn't react well. It took a good 2 months before it finally got a level of shareholders and points of reference. And then this was a nice trade right here when it finally broke out above that level, broke above the highs of the IPO. And then what happened? This is when everyone in the world started getting so bullish. And what's this day? In technical land, this is a very, very important day. You don't care what sales traders say. You don't care about what people say on TV. When you have an outside day, okay, and closes on the lows, and then doesn't get back above, okay, it's a sell signal. I bet you I put in the volume here, and we'll see what type of volume it was that day to see if it confirmed it. So let's go to basic studies. Let's go to volume, and this was this day, and look at the volume. That was some pretty big volume based on, look at the small volume here, small volume there. Here you have big volume, selling the excitement. And then from there, it just meticulously went to the downside. So we call this affectionately our trash for treasure trade. And at this particular point, I just showed you before. Let's move it over, I guess. This area has to hold. Look at me, I'm like, I'm trying to be a coordinator here. How does this look, Brittany? Not so good yet? How are you?
You're getting there.
There we go. So here's where I think it has to hold. Like if I were in this stock, I would say, okay, I want to see it hold above this, actually 340. If it doesn't hold 340, it could just fail and be like a false breakout. If it holds higher here and blows off, I think the Groupon news kind of hit it too. People were playing this for a big bounce, and it wound up being a decent trade, and then that Groupon news kind of took some of the wind out of the sails of other stocks in that group.
All right, Market Picker here has a question on OpenTable. He says, what are your thoughts on Open's weekly chart? It's cleared its base on the weekly around 52. It too, though, can be choppy on the daily. What are your thoughts?
On the weekly chart?
Yeah, he says it's cleared its base on the weekly, but he says it can be choppy on the daily. He wants to know what you think about Open.
Open, I remember, a while back, a lot of people traded. It was a little cleaner, and then it, again, like you said, it turned into a bit of a choppy mess. Looking at the chart, I haven't looked at it in a while or traded it in a while. Let's just take a look here. You will see that it's had a big run as far as trend-wise. You look at this trend, it looks kind of like a la Netflix somewhat right here. You have the accelerated trend that wound up breaking here, which was your exit. Here is more of a gradual trend, exited again, and then corrected, and then it looks like it went sideways and starting to act better. So you go to the chart now. Here's your daily chart. It's just a lot of tails. A lot of, it's above the 8-day. I think it's acting okay. You said what? You want me to go to the weekly? On the weekly, it's trying to break above, like you said, this key level right here. I know there's a big short interest. It's okay. If you're an OpenTable fan, it does seem like this is going to be a big level for it to get through. This is much bigger resistance, around 70. So I would say that there's a chance it can get up to the 70 level this year. But again, looking on the daily chart, it's pretty choppy and not the cleanest stock, but it's above the 821, and stay with it that way.
All right, we're getting some questions on Herbalife, and before we address the questions on how to play it, here's one just asking where you stand on the Herbalife debate, Icon or Ackman?
That's funny, right? Everyone in the world was in their seats when that whole debate happened. I think I was on the stair machine with my headphones on watching it, and it was awesome. John, get out of the picture. It's okay. You guys remember John? He was he's editor-in-chief. He's trying to fix the laptop that went down so we can get more of your questions with full disclosure. So with that said, you can just come on in, John. There he is.
Say hi to everybody, John.
Oh, you're not even waving. Come, you can come.
How you doing, everybody?
No, wrong side. There he is.
Come on in with me. There we go.
There
We
you
go.
go,
There's John.
All right.
See ya.
He's saving the day.
Okay. He might be doing the relaxed morning call tomorrow. But anyway, with that said, Herbalife, it seems like it's turned into a media focus because people tune in when they talk, and the way it went last time with the cursing and the out of whack type of scenarios, it was great TV. But as far as the stock and the fight, there are trades there, but I would say just don't let it ruin your day. I know I came back and I saw the news that Icon was getting on the board. Now he could buy 25%. So if you were short, something definitely to be a little scared, right? Here's a guy that could continue to buy up the float, big short interest, but both of them are very smart, powerful guys. So I would just look at the chart more and really know your risk, because as much money as you can make could be taken away like that. So you go to the chart here, and you will see on Herbalife that way back when you had the big decline. Okay, this was huge. I think this is when it was fully disclosed, and then you had the breakdown. Okay, first of all, this was fast and furious. You look at that, and then some people were saying this was like a little bit of like a crazy head and shoulders type of pattern, where here was your your left shoulder, your head, your right shoulder. Actually, this doesn't look anything like a head and shoulders pattern, but anyway, it broke support. So here we are recently. I will say that I think guys were looking at it today, technically, not even knowing what was going to come out, because what happened here? You had a bit of a reversal, okay, right here, and then you saw a commitment, and then it started breaking higher. So right in this area, it looked as if people wanted to buy it regardless, and then you got a little lucky with the news if you were in the halt. And now I would just say here's resistance. It's going to be a battle, and there's going to be a lot of trades along the way, and it's going to be very headline driven, so you just have to be careful. Don't have too much size with it.
All right, here's one from Market Picker about Boeing. He says he knows that you like Boeing longer term, above 78, and his personal target is 90. He says, how would you recommend timing an entry with it being a bit choppy?
Well, if he's looking for a target for 90, that means he's probably not an active trader, more of a macro swing. And I think a little bit in the base, and then a little bit when it breaks out. And this was in my 2013 thesis because I saw the size of the channel. The same way I saw the size of the channel for Walmart last year that worked out well. Same way I saw the size of the channel for Google that went to all-time highs, and Home Depot. All three of them were because they were big channels that showed mega cap accumulation. Okay, I don't know about Boeing's business. I know they make planes, and hopefully they start putting TVs on all of them. But anyway, actually we have iPads now, who cares? So you go to the chart here and you will see this long channel, okay, going across. So, same way there was like 10 years worth of pain in Walmart, not quite that much in Boeing. So here we are at the upside of it. It just had everything thrown at it besides the kitchen sink as far as the batteries, the engines, or this, or that. So, and here we are near a breakout level. So I would say be in tier one, okay, if you're looking to buy a total of 2,000 shares of Boeing, be in maybe 1,000 now. And if you go a little bit closer, once it starts to get above this 78, you get into tier two, and then let it just work for you. Okay, let it then take out, the high that was put in right here. This high here is about 80.21. So, with that said, these type of stocks you don't hear a lot of people in the trading floor talk about because they're choppy. Now, Brittany, there's a big difference between stocks that are good trading vehicles and stocks that are good investment vehicles. And right now, Boeing, I would think, it's something that if you don't look at it on a day-to-day basis, it's something you put in your drawer, so to speak, and there might be a good breakout in there. There might be this trade right here where it blasts through 78 with volume. Oh, there you go, Ben, with the volume, and you get that clean move. But recently, as a trader, this is somewhat of a choppy mess. You had a nice day yesterday to then come back in today. You had a move up and then go down. This is like a choppy mess, drives you to drink. So don't have too much. But maybe as an active trader, we get a trade. And if we could trade and hold above this 78, you probably get some kind of clean move for cash flow. But at this point, I would just put it in the drawer the same way we talked about with Duncan. That was a good trader for a little while, but then we said put it in the drawer. Actually, let's see what Duncan is. Our good friend Dunkin' Donuts. All right, This was a stock, we talked about last year a lot as having the ingredients of a new issue that could, be a macro investment. And, here, like when it was a good trading vehicle, this one it looked good. This one it broke above this trend, was looking better. And then it did it again right here. And then I remember once it broke this trend line right here, this 34, which was big support, I said, you know what? I don't want to deal with this right now because I don't need to hold it. I'm like, but if you're a macro investor and you have a nice long time horizon, it could be 43 to 44. And then during this mess, people were saying, what do we do with Duncan? What do we do with Duncan? I'm like, if you're holding it for a macro trade, then sit in it. And now PS, I missed this whole move because I was just not involved in it. And it looks good. And I think up here, you're starting to see a little traders focus on it because they think that at some point we're going to get that move above 38. It's going to be clean, and you can get a trade there. So with Duncan, maybe you're in a tier 1, goes above 38, you get into tier 2, but overall, I don't see why not in the next year or two this thing can't be 44 to 48.
All right, and we haven't talked LinkedIn yet. LinkedIn's been holding in well, and Ken here wants to know what you think about playing it now.
LinkedIn. Stock I love, but I'm a little upset that I didn't play it in a different way. Because as a risk-averse trader with stock like LinkedIn, you act on it differently. And sometimes I wish I was a huge fund and I could have tons of shares put away, which I'm going to might be a fund soon anyway. LinkedIn, just like Duncan, was one of the three amigos. It was LinkedIn, it was Coors, and it was Duncan, because all three of them were new issues that came public within a year or two time frame, limited floats, big franchise name, the room for growth. So that's what you look for to find something that you could ride for a few years. So you go to LinkedIn and you will see that it was perfectly set up before earnings. You look at this chart pattern, it was really, really nice. And I think I tweeted right beforehand, I said it's only a matter of time before it takes out 125, which that's what it was right there. And you could see 145, 155. And now look where it is, near 168. So anyway, I took a call spread into earnings, made decent money, but it would have been much better to own a lot of shares, which I didn't have. But there are investors that believe in it and have it, and funds. And here was the gap up right after earnings, which held. So that was one way to play it. You could have waited for the gap up and said, I want to see, I want to buy it right after that. Or you could have bought it when it went above the earnings day high, which was 51.89. Or you could have said, I'm going to let it consolidate, prove that it could hold higher. And then we talked about in the morning call, we said above 162-ish, it could break out again. Best in breed. And now today, didn't pull in, didn't fail, and acted very well. Stayed in the top third. So if you're flatted, get another day like this, you might even get a nice momentum trade above 169.67 for continuation. But overall, this is acting like best in breed. If you're a macro investor, stay the course. I think that there's still a lot of room left in LinkedIn. I'm hoping maybe they split the stock on the next quarter, so this way it's not a blimp up there, because we all know when these stocks get too expensive, then everyone says how expensive they are. But whatever, it looks good.
In summation. And what about Netflix? Ken's asking about Netflix also.
Netflix is the same type of scenario, and this one had a big time gap up on earnings, very high short interest. And today, actually, I went home long it yesterday, and I added to it today, and it gave you a nice cash flow trade, nice day and a half trade, which is what active traders look for. If you're not holding it, you have to figure out ways to make money with it. And here was a little bit different. Here was your gap up. You didn't get much on the day of earnings. This is when you could have entered it. And then there's been a multiple strategies here. Here's your bull flag, consolidating this move from earnings. Here is your move above 175, gave you a bit of a 3-day actionable trade, came back, retested it, and finally you hit a little bit of a high, right? Because this was an engulfing bar, so maybe you got out there. You also had somewhat of a trend line that somewhat broke. But what did it do? It came in, held support. So right when it looked like it was going to break out, I said, let me get a little bit yesterday. And then it was a nice little buy for cash flow through 186. And then it went to as high as 192. And now you have this upper range. The question is, how long does it need to maneuver this upper range before eventually trying to take out that 197.62 high to tag 200, which I think, that's where it's going.
All right, Warm Trade Winds asking, hey, Red Dog, please give your expert charting advice on SodaStream and Tempur-Pedic. He wants to go long and wants to know good entry points.
Soda. Like, whoa. Someone's
Little construction
nearby. Going on nearby. So anyway, with that said, either that or someone's invading New York City and they want to come and get the two of us. Hopefully that doesn't happen. So anyway, here is SodaStream, okay, very choppy, nice move to the highs here. You have a bit of a downtrend, just looking at it this way. Came in, broke below the 50-day, which this has been a volatile stock, so that happens. And now it's trying to regroup and hold the 8 and the 21, which was rejected at today. I'd say if you're not in it, you maybe trade it versus support, and it's going to take probably some time in order to continue to base, to absorb this big move from late November. And then when it breaks above this downtrend and start and you have a higher, lower high, and it makes a higher high, maybe that's when momentum comes back. So as of right now, it still looks like it needs time. You had a small red dog reversal, that gave you a 2-day move. It's kind of trying to hold in there. Here's a little micro level, I guess. If we were to start to get above 49.35, then you could see a move to this area. But it's pretty choppy. I would take trades or just buy a little bit and then put this as your stop.
All right, and what are your thoughts on TPX, Tempur-Pedic?
Tempur-Pedic, I don't really trade this one that often. If you look at this chart, you'll see it's gotten, wow, this was crushed. Tried to base and get new shareholders involved, and just came back up pretty strong, and now it looks all right. It's above its moving averages. It's kind of holding in there. I would say stay in it as long as it holds 38, and if it wants to continue, there it goes. It's in the game. It seems like you're gonna have a lot of old memories in here, right? A lot of people lost a lot of money if they stay involved. It did fill this gap, okay, which negated this last power pack, and it's okay. If you want to go with this, it wouldn't be for me.
All right, we're bouncing around all over here. Stone Street's asking if you think we can buy here in the mortgage servicers, stocks like OCN, NSM, HLSS.
Let's see, OCN. OCN looks like it's trying to regroup a little bit. Okay, you had a move off the highs, right? This was, I think, when me and Darcy were talking about in the morning call, or somewhere around here, or maybe here. And just like everything else, it came in, broke the 8, broke the 21-day, held support, had a nice 3-day move. So, I think it's okay. What you don't want to see is it reverse right here, okay, and create somewhat of a head and shoulders top, because that also wouldn't be great for the market. So as of right now, you just had your quick snapback, so I wouldn't be chasing it, but see if it holds in there and resumes the trend that's been very, very strong for a while. So at this point, it's been a really good stock, a really good investment, decent trade. I would just be careful that that this 40 doesn't reject it and it comes down, because then you have a little bit of a head and shoulders top there.
All right, well, that is all the time we have for questions today. Scott, any closing thoughts as we head into a new month tomorrow?
I hope that's not the dragons at the gate, and I apologize. We're in a big office building here, so if you heard some banging, it is what it is. My closing thoughts is this, Brittany. You had a lot of traders that thought the rally was over, so they probably got out of some of their swing positions, which is what I did also. Okay, I'm an intermediate trend follower. In the last 3 months, I've had between 10 to 15 positions. So with that said, I also brought down my positions, and I also said I'm going to take some risk off, because IBD went into market correction. First, it went to rally under pressure, then market correction, and that always tells me to be a little bit more cautious, raise some cash, and why not? So with that said, you see us back at the highs, and you don't have the positions you used to have. You could either beat yourself up, which I don't think is the prudent thing to do, or you could say, you know what, it is what it is. That's the way the market's trading. But if you got short at those lows, after a pull-in, and you rolled it up this entire way and covered into today's move, you know what, you got a little opinionated. You probably didn't trust your levels and use your retracements, and you got to change that, because you're probably the same guy that might have rolled up their shorts all through the first quarter or January when the trend looked great. So right now the trend has been a little choppier. It looks as if we could continue. The jury's out a little bit, so stay with positions you like and know your time frame, because again, macro investors didn't even yawn during this market correction, unless a broker called them scared and screaming, or they put on the news or watched DG say he's all out. I'm not going to say who DG is, but he's on TV. I'm all out. I think that's just irresponsible. Some guys in the media and the TV, they're like, I'm all out, and they fearmonger and they create headlines, and then if you get all out and you follow the guy that you like on TV because he's sometimes pretty good, he'll then, after bounce, say, oh, I'm all back in, and then you're all out, and you don't know how to maneuver, and then the market goes up and you're left flat-footed. So just take everything with a grain of salt, know your time frame, keep educating yourself, make your own decisions, and you'll have conviction enough to make money.
All right, thanks, Scott, and thank you guys for sending in so many great questions tonight. We'll meet you right here next Thursday for another StockTwits Q&A. Have a great night.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.